The South Sea Bubble. You've probably heard of it, right? It's a name that's echoed through financial history for over 300 years. It's basically the poster child for greed, for mass delusion, and, of course, for a catastrophic crash. It's one of the most famous financial disasters ever, and it all kicked off with a very simple and very seductive promise.
Yeah, it's a story we think we know. It's often captured perfectly by this famous, chaotic image, an entire nation just swept up in a get-rich-quick frenzy, losing absolutely everything overnight. But what if that legendary tale, the one that's become the go-to example for every market crash since, isn't the whole story? We're going to peel back the layers of the myth and find a much more complex and, honestly, a way more fascinating reality.
Okay, so to really get what happened, we've got to rewind the clock. Let's go back to early 18th century Britain. The country was in a really serious financial mess after decades of incredibly expensive wars. I mean, the government was in debt up to its eyeballs. We're talking a staggering £9 million, which for that time was just an insane amount of money. They were borrowing from all over the place, and there was no real plan to ever pay it all back. The situation was getting desperate, and the government desperately needed a way out. And then, right on cue, this new, really ambitious company steps onto the scene with a plan so revolutionary it sounded like magic. This was the South Sea Company, and they came forward with a deal that, well, it sounded almost too good to be true.
All right, so here's the big idea, the grand plan. Step 1, the company offers to take over Britain's entire national debt, just all of it. In return, anyone the government owed money to would get shares in the South Sea Company instead. Then, the government would just make one simple interest payment to the company, which would get passed on to the shareholders as dividends. And here's the kicker that made everyone's eyes light up. The company was granted an exclusive monopoly to trade with the supposedly gold-rich Spanish colonies in South America.
But there was a tiny little problem with this whole brilliant trade monopoly idea. See, Britain was at war with Spain, who, actually controlled South America. People at the time, like the author Daniel Defoe, basically pointed out the obvious. I mean, think about it. Why on earth would Spain just hand over its most valuable trade routes? The truth? The trade was never really going to happen. It was mostly just hype.
But here's the crazy thing. The hype totally worked. In early 1720, fueled by these wild rumors of untold riches from the South Seas and some pretty clever financial maneuvering, the company's stock price started to climb. And then it didn't just climb, it went vertical, sparking a speculative fever that basically took over the entire nation.
I mean, just look at this chart. You can see the madness taking hold in real time. In January, a share was trading for about £130. By June, it was an absolute rocket ship. It got to the point where the rising price was the only reason to buy, which created this dangerous, self-fulfilling prophecy. And it finally peaked in August, get this, at nearly £1,000 a share. That is a more than seven-fold increase in just 8 months. Can you imagine the frenzy? People were borrowing money they didn't have, they were selling off family property, pouring their life savings into this company, thinking there was just no way they could lose. This quote from back then just perfectly captures the vibe. Someone writing in June of 1720 said the demon of stock jobbing, which is just an old-timey word for frantic, speculative trading, had gotten a hold of everyone. It filled all hearts, tongues, and thoughts. It became this all-consuming national obsession.
And you know what? It wasn't just a South Sea Company. This was happening all over Europe. Hundreds of these other bubble companies popped up, promising fortunes from the most ridiculous things. There was famously one that was advertised as a, quote, a company for carrying out an undertaking of great advantage, but nobody know what it is. Seriously, this print here, the Bubblers Medley, it just captures that wider craze perfectly.
But of course, what goes up must come down. A bubble's gotta pop, right? In the late summer of 1720, confidence started to crack. People began to ask, wait, is this valuation really sane? Insiders started to quietly sell their shares, and then panic set in. And just like that, the stampede for the exit was on. So here's that same chart again, but check out the second half of the year. The crash was even faster and more brutal than the rise. What took months to build up came crashing down in just a matter of weeks. By December, the stock was back down below £200, wiping out fortunes along the way.
And that brings us right back to this image, doesn't it? This is the story that got cemented in history.
A nation ruined, fortunes gone, a classic tale of mass delusion and corrupt politicians. That became the powerful, enduring legend of the South Sea Bubble. But, and this is a big but, it's not the whole picture. Not even close. See, when modern historians started actually digging into the records, the company's books, bankruptcy filings, all that stuff, a totally different story started to take shape. So let's separate the powerful myth from what really happened.
All right, so for the rest of this explainer, let's do exactly that. We're going to tackle 3 of the biggest myths that have defined how we think about the bubble for centuries. Okay, myth number 1, that this was a case of mass hysteria, with everyone just blindly and irrationally chasing a fantasy. The reality? This whole scheme was publicly debated, and pretty intensely right from the start. Critics like a politician named Archibald Hutchison published these incredibly detailed pamphlets, packed with math, proving the company's stock was way overvalued. This wasn't some secret, it was a full-on public argument. Oh, right. Myth number 2. This idea of total social chaos. Servants getting rich while lords lost their shirts, turning society completely upside down. But when you look at the actual evidence, it tells us this was pretty much an elite affair. You needed connections to get in, and more importantly, you needed a ton of cash. And this isn't just a hunch. Look at the hard data here, taken right from the company's own records. The average payment for an investor in the first round was over £4,500. By the third round, it was over £8,500. Now, to put that in perspective, a clergyman back then might make just £60 in a whole year. So this whole idea that tons of regular folks were ruined, the records just don't back it up. And that brings us to the third and final myth, that the crash triggered a total economic meltdown that plagued Britain for years. And again, the reality is a lot more focused. The crisis was a huge deal for the high finance world in London, for bankers, for international traders, but a lot of the domestic economy, things like farming and local trade, wasn't hit nearly as hard. It was a crisis for the financial world, not a nationwide depression for everyone else. This bankruptcy chart really makes that point. Look, did bankruptcies go up? Yes, for sure. But it wasn't the tidal wave of financial ruin that the legend suggests. The numbers ticked up, but it was far from a complete economic collapse for the whole country. The impact was real, but it was concentrated. So that begs the question, right? If the reality was so much more complicated, why has this simple myth of total widespread disaster stuck around so powerfully for 300 years? Well, there are a few really good reasons. First, it was a genuinely shocking story of political corruption, with high-level government ministers caught up in insider trading. Second, you had brilliant artists and satirists who created these powerful, unforgettable images of chaos. Third, it just became the perfect, easy-to-understand story to compare all future financial crises to. And get this, here's a little fact that might surprise you. Nobody even called it the South Sea Bubble at the time. That catchy name was invented 50 years later, which helped package a really complex event into a simple, memorable story. So in the end, the South Sea Bubble became a legend because it's just such a good story. It's a powerful, simple, and useful cautionary tale. It took a messy, complicated reality and turned it into a clear story about greed and what happens next. And that kind of leaves us with one last question to chew on. What stories are we telling ourselves about our own financial booms and busts right now? And more importantly, what complex realities might those simple stories be hiding?